This is All About Bitcoin, a show dedicated to all things questions and markets related to Bitcoin, little b for the currency, and Bitcoin, big B for the network. A collective journey to understand, apply, and use this innovation, all Bitcoin, all the time. I'm your host, Christine Lee. Let's have a live look at Bitcoin right now. The CoinDesk Bitcoin price XBX index is soaring above $51,000 right now, trading at 51.82. Advancing about 4.4% over the past 24 hours. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as the leader in crypto news, events, and data. And for
the chart of the day is brought to you by Crypto.com, the world's fastest growing crypto app.
All right, so Bitcoin waking up during U.S. trading hours after falling during Asian and European trade, breaking past $50,000, that threshold there. The rest of the crypto markets are advancing lockstep with Bitcoin, but this CoinDesk and Crypto Compare chart shows trading volumes remain low across major centralized exchanges in advance of the year-end holiday season. Similar trading conditions are being observed on stock exchanges. The Dow and NASDAQ are advancing, and the S&P 500 is trading near its record high as investors shrug off Omicron virus fears. Crypto research firm Fundstrat is bullish, noting that leverage in the Bitcoin market is increasing, which may signal near-term volatility over the next couple of weeks. All right, joining me now to discuss BTC price and other Bitcoin news is our weekly review panel. CoinDesk Managing Editor of Markets, Brad Keoun in Austin joins me. Christy Harkin is off. Hello there, Brad.
Hey, Christine. How are you?
Good to see you. All right. We got a bit of an awakening in Bitcoin. It was struggling to break 50. Wasn't clear if it would, but there it is. It seems to be on a bit of a tear for the day. It's no Santa Claus rally yet, but what do you make of this new support resistance level?
Well, clearly for the past month or so, and definitely over the past 2 weeks, that $50,000 level has proved a pretty key psychological level. It's kind of like, we're above 50 or we're below 50. And for the past couple of weeks, we've been below 50. And that has, kind of been a little bit of a disappointment to a lot of Bitcoin traders. We've talked over the shows over the past few weeks about the Santa Claus rally that, didn't happen. Well, this is not really that Santa Claus rally, but it's a little, it's like a stocking stuffer.
That's right.
People have been wondering kind of where we're going from here. We're just going to trade sideways for the rest of the year. So, today's action, I mean, it's not a huge move for Bitcoin. We're up about 5% on the day, but it's not a tiny move either. So this is probably will get some people excited, or at least like checking their feeds and their wallets over the next couple of days.
Do you see a correlation with the stock markets?
I was just looking at this earlier today. Bitcoin has, for the past year probably had a slightly positive correlation with the Standard & Poor's 500 of stocks. But it kind of comes and goes, and it's usually a pretty weak correlation. But it looks like it has strengthened probably over the past couple weeks. Again, it's not, but in general, yes, it looks like, Bitcoin does tend to trade a little bit with stocks, and, it's kind of like Bitcoin also is increasingly trading, people say, as a macro asset. So it trades on some of the same fundamentals that drive the stock market. So, whether Bitcoin's following stocks or Bitcoin and stocks are kind of following the same things, the economy and inflation and whatever the Federal Reserve is doing. But yeah, stocks have been up the past couple of days, and now Bitcoin's up too. So traveling.
If we take a look at that chart, I noticed that Bitcoin, hasn't made an advance over 60% year to date. ETH has had an incredible run for the year, over 4,000%. And we do see in activity today that DeFi is doing quite well. What do you make of that?
Well, in general, as an investor, it depends on your perspective. If you're stuck in traditional markets, you're 25%. Yeah, that's actually pretty good. Pretty good year for the S&P 500. And a lot of these big giant pension funds, they try to get 7%. So they're probably doing fine. But then, you're always looking over the fence. And so here's Bitcoin at 68%. So there's probably some FOMO there, maybe some greedy people wishing they had those Bitcoin returns. But then again, you're a crypto investor, you're in Bitcoin, and you're looking at these Ether returns this year. Ether's quintupled, and that's so that's got to, and also the Bitcoiners looking for maybe $100,000 at the end of this year. That's been kind of one of the big talking points, and we got this little rally today, but it doesn't seem like we're close to going towards $100,000. Could be wrong.
No,
it's
could happen
Bitcoin,
next year.
But right.
Keep those laser eyes on. We'll see. Hey, Brad. So we heard from central banks last week. Over the weekend, we heard from China, the People's Bank of China. They're reducing rates, a rate decrease, whereas the Bank of England is having a rate increase. The ECB is going to start tapering in March. The Fed is doubling tapering and will end their bond buying program by March. So they're taking different economic approaches to Omicron fears and inflation. How are the markets reacting within that?
Well, the central banks, it's interesting because a lot of the G7 central banks, they do try to coordinate some on monetary policy. And so generally speaking, all the big G7 central banks are tightening at this point. The Fed is tapering with an end to end their asset purchases by March, and also the ECB is tapering. The BOE, probably out ahead of the curve in terms of going for the surprise rate hike that they had. But with China and then China's economy, it's a little more opaque. Their data is a little harder to come by, and it's a little more centrally managed. But they also, they have very tight controls on their currency. So they try to keep a very close peg to the dollar. So sometimes, when the central banks move, that affects the currencies, and that is kind of how these central bank decisions in one country get translated to global markets. It's via the foreign exchange markets. But with China, they do this and they do that and they do this, but they try to keep an iron grip on that RMB exchange rate. So they may be loosening conditions internally, but that looser monetary policy in China may not translate to global markets, where again, like the predominant trend of the G7 central banks is tightening. So what all that means for Bitcoin, generally speaking, probably people more focused on the tightening in the in the Western countries than they are in the China rally. Yeah. I mean, people are also looking at the China economy with Evergrande, and they're very, also, I was just reading, they're very strict about coronavirus cases, and they're very aggressive. Yeah. Anyway, that's about it on that.
Let's pivot to a subject that is taking crypto Twitter by storm, and that's Jack Dorsey versus Web3. We have Block CEO Jack Dorsey, the founder of Twitter, tweeting out, there it is, I'm officially banned from Web3. So he's also tweeted, the VCs are the problem, not the people. He's been on a defriending spree. One of the casualties is A16Z co-founder Mark Andreessen, legendary VC who is investing big into Web3. Then Mark Andreessen retaliates, blocking Jack on his Twitter, as you could see right there. And so Jack starts trolling Mark Andreessen and A16Z. There you see, this mission statement has always felt so dark. We invest in software eating the world is the Twitter bio for A16Z. So it's interesting, this back and forth between Jack and Web3 proponents. What do you make of Jack's assertion that Web3 is controlled by VCs and not sufficiently decentralized?
I mean, I think he makes a pretty good point. If you follow the money with a lot of these projects, it is absolutely true that a lot of the tokens are, on some of these projects are definitely held by insiders and early investors. And, they have plans for eventual distribution of these tokens over time. Like if you go to their websites and you look they have these pie charts that show the distribution. Over time, they do plan to get more decentralized. But yeah, it's a fair criticism. Yeah. I think, what's going on here, what I just talking with my sources is, there's definitely a sense that the kind of blockchain wars have heated up a little bit this year. Bitcoin has kind of gone its own way. And, then there's DeFi, Ethereum, and like layer 1 competitors, layer 2, like competitors for kind of like the application side. And Bitcoin, it's a store of value. It's digital gold, and maybe it's a form of payment. Maybe it's a currency. Mm-hmm. But, there's really kind of a bifurcation of the industry. And Bitcoin obviously is the first. It's the biggest. It's the original. It was the breakthrough invention. Everybody else is kind of copying that. But there's these camps, these ideological camps, and they're not getting along.
Well, I think
and Jack,
clearly he doesn't want what happened to Web 2 to happen to Web 3, or to happen in this more, I guess he doesn't care about Web 3, but he wants to see the next phase of the internet developed in such a way that people have self-sovereignty. A couple of firms do not own all our data and exploit and influence our decisions. And so he is sounding the alarm on that and criticizing VCs for the control that and influence that they can have in that technological development. So I see where he's coming. He's winning a lot of fans. He's creating a lot of enemies. He's defriended Brian Armstrong, CEO of CoinDesk, I can't believe I make that mistake. Everyone makes that mistake. I shouldn't. All right. Coinbase CEO Brian Armstrong, as well as Gemini CEO Tyler Winklevoss, but interestingly, not Cameron. So
well, they made the joke. I think it was Cameron made the joke or it was like Jack said he would pass messages through Cameron to Tyler, and then one of them responded that they were non-fungible twins, NFTs.
Love it.
Anyway.
All right, I want to touch on one last topic, and that's the SEC has rejected Cryptoin, a spot Bitcoin ETF proposal. And this happens at a time when GBTC is seeing their discount widening to 19%. So it looks like SEC approval is looking kind of grim. Brad, would you agree?
I would definitely agree that is what the market is saying via the GBTC discount. I mean, Gary Gensler basically told everybody he doesn't want to approve a physical spot ETF, and Grayscale and Barry Silver, who runs Digital Currency Group, which owns CoinDesk. I mean, they've been lobbying the SEC hard, really hard, but the market doesn't think it's going to happen. At least that's kind of the signal that if you're reading into the GBTC discount for sure. And, the Cryptoin news is just kind of another example of, SEC doesn't want to approve a spot Bitcoin ETF.
Mm-hmm. All right, Brad, we're going to wrap it there. Happy holidays. Great seeing you. Enjoy
too, Christine.
A restful, long weekend. I'll see you back in the new year. All right.
Sounds good.
That's it for See you, Brad. That's it for All About Bitcoin. I'm your host, Christine Lee, and we'll do it all over. Oh no, we're going to have a break tomorrow, and we'll be back on Monday. And, in the meantime, happy holidays, Merry Christmas, Festivus, whatever you celebrate. Warm holiday greetings from me to you and the rest of the CoinDesk team. You're watching CoinDesk TV.